here from Vancity Investment Management. You probably know us better as Vancity Credit Union, the local branches sort of throughout the Lower Mainland. I'm here, I'm going to outline sort of how divestment has looked for us. And I want to give you a bit of a background, though, on what our funds, like how we structure our funds overall. So I work for, our funds, we manage, they're mutual funds. They're funds with, we have an overall strategy with ESG integration, which would be environmental, social, and governance performance. We incorporate negative screening, where we screen out companies that hold tobacco, nuclear power, military weapons, pornography, and gambling. But we also do positive screening, where we're looking to invest in companies that are creating positive impacts in whether that be in the environmental sphere or, paying living wages or, with good government governance and executive compensation practices. It's an integrated approach. So it's something where we don't just look at ESG and impact criteria or financial. We really are trying to incorporate, the best way to really describe it is that we benchmark to the normal, the TSX that you'll see, the whole market. We're comparing our performance to that. We're not trying to say, well, look, we're doing good for a fund that cares about the environment and is trying to make good impacts. We want to prove to people, and I would say want to prove, I think we are proving, we actually are hitting our 10-year track record, that you can make good investments that help the environment, help your communities, that also are financially profitable. So with that, and I'll give some background. So it is that I'm mainly dealing with public equities, publicly traded securities, whether that be equities, bonds. We don't get into some of the private equity and those things that have. I'm willing to, I can talk in some of the later when we're talking about some of that, but that's generally my approach, our approach, and where we come from on that. So giving you that background, we have adopted a climate risk strategy. And it's a 4-part strategy where so the 4 parts are divestment, decarbonization, reinvestment, and engagement. And so how that looks is we divest where possible and where there is enough diversification options, we will divest from fossil fuels. And how that is looked like this, when did we start? It was probably 5 years ago. As you can see, I don't have slides, so I'm just trying to keep myself on track here. And trying to stay by the mic, because I like to move and talk. So with that, for our divestment is our global equity portfolio. We found there is enough in the global equity to be able to divest fully from fossil fuels, as well as in our bond fund. We hold no fossil fuel bonds. Decarbonization, and that's where we really look at keeping the companies that are in the funds, making sure that they have a lower carbon footprint. That's something where, our Canadian fund, its carbon footprint is about 1/3 of, if you're looking at the overall Canadian universe. And on the global side, it's about, I'm bad on the numbers, it's 20% of the global, sort of if you're looking at, we use the MSCI World, it gets all technical, I can talk about that stuff later. But sort of when you're looking at a universe of, let's say, about 1,600, 1,700 companies globally. And we look to, and so right now our Canadian fund, so that's something, because that's a difficult, especially in Canada, divesting for a portfolio that is trying to maintain financial performance alongside, actually better than the benchmark, but at least alongside the benchmark. Divesting is difficult in Canada. And the reason for that is there's just the Canadian market, almost 20% of it is oil and gas companies. It's up there with finance. It's a hard thing to move from. But it's something that we've made a concerted effort. And I guess I'm really here to tell you that it's possible. And it's not an all or nothing. It's about taking steps towards it. So about 5 years ago, we actually decided, that's when we divested the global equity and the bond fund. And it's when with the Canadian equity, we actually moved away. We do not invest in coal, tar, oil sands, whatever you want to call them, or major pipelines. We also look at companies, or it was oil and gas companies with a higher carbon footprint, we would move away from as well. And so we're currently, like I was saying, that 20% of the index being about energy, we're sitting right now at about 4%. And that is a very select few companies that generally have a lower carbon footprint. And I go through it's a fun thing I do every quarter where I look through all the companies we hold and how much carbon they have in relation to their sales and in relation to like investments. And so it's something we focus on ones with lower. And we are actually hoping, it's looking like we're in the process of completely divesting. But I guess that's why I'm really here to sort of let you know that it isn't, because I know sometimes it's that scary. When you're managing money, it's sort of this, I know it's like divest from fossil fuels. It's not just a light switch you can just go ahead and do. And I guess I'm here to show that it's something, you can make a big impact by taking steps towards it. And so that's something, it's a big so that's how we move on to as well, like reinvestment. So it's really about we look at, where we would otherwise have funds invested in, let's say the benchmark. When I say otherwise, it's always looking at our fund's performance versus what kind of the entire universe that you can invest in is doing. And so we will look at taking that money that otherwise would have gone towards fossil fuels and putting it towards companies that are either producing renewable energy, whether solar, wind, as well as companies doing energy efficiency. I mean, that's a big part of the transition, I think, is we need to get better with our energy use. And there's a lot of easy things, like when you look at real estate is something I've really been looking at, that there's so much to be done actually in real estate, just in terms of using water more efficiently, power more efficiently. We just sort of have these legacy systems where a lot of this energy gets wasted. And so that's where we really look at kind of putting money towards there. And we also, though, would look at engagement, where we engage with companies. Up until we've actually sort of have halted our fossil fuel engagement because we are planning to get out of any fossil fuels. But in the past, we've done a lot of engagement with these companies, asking them to disclose through, I don't know if you're familiar with the Carbon Disclosure Project, the CDP. They've been around, I believe, since it's like 2000 or something like that. Don't quote me on that if I don't have numbers in front of me. It's about that. So we engage with our energy companies to disclose what their carbon emissions are, both direct from operations, as well as their impacts, that we refer to those as Scope 3 emissions. What do your actual products and services lead to in terms of carbon emissions? And as well as, it also includes a lot of the strategy. What are they doing? What are they looking at? Some of these, like stranded asset risk, and the fact that a lot of the carbon, with oil sands, you just can't meet our a 1.5 or 2 degree scenario. Hopefully 1.5, but that just in terms of, I was reading something today, I think we're on track for 3 degrees if we don't make, sort of as of now. So a lot about that is doing like engagement, as well on different things that I find it's something it's I think can be part of a divestment strategy. It's not just looking at sort of with engagement. So sorry, I sometimes like sidetrack. Slides would be helpful. I didn't do it. So I will talk about our so with like Franco, actually a gold royalty company that we hold. They had actually recently, not to our liking, they'd recently invested in some oil and gas royalties. And so that's something where, and I think this is where you can be really powerful by taking, like we actually spoke with the chief operating officer, and we were talking about the Task Force for Climate-Related Financial Disclosures, the TCFD. It was commissioned by Michael Bloomberg and Mark Carney, the former Bank of Canada governor. And it's really about getting companies, financial companies, all companies, to look at how climate change is going to impact them and what they can do to address those risks. And so that was something where we're talking to companies, letting them, and honestly, they hadn't heard it. Like when we talked to them, they weren't familiar with it. And so a lot of it is as well raising awareness with companies that are having impacts to try to help mitigate that, as well as participating in the Climate Action 100 Plus, which is a group of investors. We're taking targeted action towards companies that are producing, whether it be directly oil and gas companies producing like fossil fuels, or companies with like refrigeration companies, because that's actually a big part of where a lot of fossil fuels in some of the, actually solving some of the ozone issues where we ban CFCs, the replacement HFCs are actually, they're a big contributor to global warming. They have a much higher rate of like carbon emissions per like bit of HSC. So it's something that's something we're working on, kind of all these different angles to like how do we get less carbon into the air. And I guess I'm really here to talk about it in that sense that I guess like what I'll leave you with is that like divestment isn't all or nothing. It's really about taking steps towards it, doing what you can, where you can, and just looking at not sort of putting it, I think sometimes we can just put like a block up, right? To something like, I can't do that, and then we don't even look. We don't look at like, what's the little thing that we could do? What steps could we take to make a difference, and so, yeah, I just want to leave with that. Something that we've really been working towards, that kind of getting to a point where we can really make a difference and sort of help our members' money really combat climate change. So with that, I will leave that.